Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. We have been focused on Biogen for a while. This has been something on the radar just as the calendar shifted to 2021. I feel like most people that follow the sector knew that this was coming up. I mean, originally it was scheduled for March, the FDUFA. Then it got pushed back to June. So, and as the months wore on and we got closer to the date, which was today, attention and focus and participation really started to pick up, and it really just led to what was up until this point one of the biggest biotech events of the year. It might end up being the biggest biotech event of the year, right? And and like like most of biotech events, I mean, they're not for everybody. I get that. I mean, most people, they just don't want to take the risk, and that's understandable. Sometimes these can move 30, 40, 50, 60, 100% plus, right? And I mean, for people that trade equities, don't really most people don't really want to be in a position where they could potentially lose 70 or 80% of their premium in a stock, right? Uh, Now, option wise, a little bit different, right? Option wise, we can control our risk. We know what we are risking. It's the premium paid for the contracts, right? And that's why we like to focus on events. So whether that's earnings, biotechs, like conferences, right? Like one of the great things about options is that you always know what you're risking. If you're trading debit options, you know that the premium paid, what you put into those contracts is the max you can lose. So if you wanted to play events like a Biogen, right, or if you wanted to play other biotech events, or you wanted to play earnings, then you can control your risk. And as long as you design strategies where the reward is worth it, right, then you can participate on these because they give you a vehicle to approach these events with controlled, defined risk, right? So like when it comes to like a Biogen, and you know that there's a possibility that on approval the stock could be above 400, or on rejection, complete response, the stock could be below 200. Well, then you can design options. So whether that's a straddle or a strangle, right? Like volatility strategies, like something where you can bet not necessarily on the direction, but just on movement in general, right? So you don't need to say, okay, I'm totally bullish or I'm totally bearish. You can say, I don't know which direction this is going to move. There's too much uncertainty. I just feel like, based off the fact that this is one of the biggest biotech events of the year, right? And it's, a lot of people are mixed. Like there's a really serious chance that this could have a significant pop or a significant drop, and in this case, it did. Right, it had a significant pop, and it rewarded the option players because the move was far, far in excess of what the option market was anticipating or priced in. Right, so I don't want to. I don't want people to like get scared away from these events necessarily, but I want people to like think of them as controlled risk trades, right? Like yes, if the stock didn't move, you would have lost a premium, right? But the premium is the risk, right? That's what you pay to participate, right? And then if you can draw up a strategy that has an interesting reward profile, right? If things go well, you can make 1x, 2x, 3x, 4x times what you risk, then maybe it's worth a shot, right? Like you can still look at these things and not be worried that like if you're sitting in the stock, you're going to lose 80%, right? Because if you're in the options, your max loss is what you put into it, right? Your max loss is the premium paid. So that's why we spend a lot of time talking about events for option trades, and options in play obviously talks about it a lot in all sorts of different capacities, because these types of things are really suited to option trading, right? Defined risk. You know at any point what you could possibly lose, and that is, in my opinion, a good way to approach these, because you can only put into these what you're comfortable losing, right? And you're not like overstretching yourself with leverage. Okay, so there should be more events coming up. Whether that's biotechs or earnings. I mean, um, there should be plenty going on in the near future. So I mean, if you weren't involved with this, there should be some other opportunities. All right. So just make sure you're doing your research, find out what's coming up on the calendar, and then try to figure out if you can design an option strategy that maybe might give you an edge for a trade. All right. So if you like this video and you're looking for more information about trading events with options and more information about what I was talking about with like different types of strategies like straddles and strangles, please follow up with the link in the description of the video for more information on options and play. Hope you have a wonderful night. Stay well, and I will talk to you